Sound check, 1, 2, 3, wardrobe check. All good. Welcome to our weekly market review, and what a weekend, week ahead of us. Just a quick look back at last week's inflation data out of the US. We're seeing that consumers continue to live beyond their means. The robust spending is keeping price pressures elevated, while declining personal savings rates suggests this trend is unsustainable. There's more important data coming out of the US this week. The Fed is expected to keep rates unchanged at its Wednesday update. The bigger question is whether the recent mixed bag of data will keep the Fed hawkish for a little while longer. Anything else than a hawkish stance could move markets significantly. There's also a string of jobs data coming out this week, which will provide some fresh insight into the labour market. We are expecting to see gradual signs of loosening, which could bolster the bets for the Fed's next move to be a rate cut. Then in South Africa, Finance Minister Enoch Godongwana finds himself on the hot seat on Wednesday when he delivers the medium-term budget policy statement. Now, we all know it's going to be a gloomy picture, that's for sure. The bigger question is whether Godongwana will be dropping hints at what levers or measures National Treasury are considering to balance the books, given the widening budget deficit as revenues continue to decline. Now, ETM Analytics did some research on the fiscal space, and we compiled a base case scenario of what we're expecting out of the MTBPS. Head of Research and Director George Glenos and myself had a chat about it, and the podcast will be up soon on YouTube as well as Spotify. You can look for it. It's called Reset the Frame. Also follow us on LinkedIn for the latest updates. In light of the MTBPS, we will also be taking note of the money supply data as well as government finance stats. It will provide some perspective to the challenges faced by fiscal authorities and also give some insight on the state of South Africa's business cycle. The incoming dismal fiscal news did nothing to stop the rand from putting up an extraordinary performance on Friday. It nudged back down to 18.80 against the US dollar. Now, possible reasons for this could be the resilient bond market, which continues to attract external funds. The SARB being a little bit more hawkish recently, with another rate hike not completely off the table. And it's also refreshing to have a finance minister that is pushing back against those calling for National Treasury to refrain from further tightening the budget. Now, there's a lot of data coming out this week with market moving potential that could dictate which way the rand moves as the week progresses. Other data we will be looking at this week includes the Bank of Japan, which is expected to keep rates unchanged. They could use the opportunity to strengthen the yen with some hawkish guidance. Then on Thursday, the Bank of England is expected to keep rates on hold, but it will emphasize that it's far from finished fighting Britain's high inflation rate, even in the face of growing concerns about a recession. The EU is also publishing its advanced Q3 GDP figure, and while it will remain positive, the data is set to reflect that GDP growth has decelerated. Then we will continue to track the Israel-Hamas conflict and its far-reaching geopolitical implications, as well as the accompanying risks to financial markets. The price of gold has increased 10% since the start of the conflict, as the uncertainty around whether the conflict will remain contained or whether it will spread throughout the region continues to sow risk aversion into markets. That then the week to come for the markets.